Felix here. Welcome to my London office. Let me tell you what really happened with the jobs data today. So after yesterday's blowout data where magically 500,000 Americans found jobs, today's data kind of poured cold water on that. So we came in with 209,000 jobs reported, which was way lower than the 330,000 we got last month and way lower than expected. And by the way, last month's data also got revised down by 33,000, more on that in a minute. And stick around to the end because we really explain how this feeds into what the Fed's about to do, and that's really important for your portfolio. So we missed expectations. The first miss in 13 months. So for 13 months in a row, employment data has always come in higher. This time it's come in lower. And of course, they didn't just revise last month's data lower. No. They also revised April's data lower. So we lost 110,000 jobs from the previous set of data we got. And you might spot a pattern here. They seasonally revise data up as it comes out. And then a month or two later, they revise it, down, or, manipulate the numbers to kind of what they really were, or probably still a bit lower in reality. Why do they do that? Well, politicians like to pretend that the job market is, firing on all cylinders. And of course it isn't. So the unemployment rate, that's literally the only thing here that was bad in this set of data, sitting at 3.6%. We are hoping it climb up a little bit. And of course, all of this is ignoring the 37% of Americans who are choosing not to work, which is the subject of the video I put out yesterday. Now, with the unemployment rate still so low, 3.6%, and I have to laugh at that number, hourly earnings were also hotter than expected, and that causes inflation. But if you look a little bit below the data, we've got 209,000 new jobs. Who created most of those jobs? The government. 60,000 of these are government jobs. Apparently the Parks office, went on a bender or something. I don't know where the hell they're doing that, but of course it's just to shore up this lie that the economy is doing really, really well and please re-elect me. So while the payroll data came in weaker, the low unemployment rate and the higher hourly earnings data mean the Fed's still going to have to raise their rates. Why? Because the Fed told everybody that they were going to do so. Jay Powell came out with this bizarre tale that he was going to pause for a month last month and then going to keep raising rates. And he told everybody this. He went to Europe, he got a little bit ecstatic, kind of wanted to compete with his European counterparts who were all raising rates and said, no, we're definitely still doing it. We're still doing it. We're doing it 2 more times, maybe 3 more times, as some banks are now suggesting. So he has to do it because 92% of the market are expecting a hike. So if he doesn't hike, we get a massive rally at the end of this month on the 26th of July when the Fed decides rates, and they don't want that. So they really have no choice. Rates will go up 0.25%. It'll make no sense. It'll destroy more American businesses, more jobs. It'll drive more small banks to the brink. It'll bankrupt more commercial real estate buildings, which again will hit more small and regional banks, and it'll kick off a recession that the Fed itself, in the minutes that just came out, is expecting at the end of this year. The Fed's own research is expecting things to get a lot worse economically at the end of this year, early next year. So why the heck are they still raising rates? Because either they're a bunch of muppets or they're in the pockets of Wall Street who want them to destroy the competition. You make up your own opinion on that. What am I doing? I'm just making trades. And I do that irrespective of what the market does. Don't care where it is in 6 months. I just care about what my trade's doing in a week or two. And that's a time frame that's a lot more easy to assess. We can have 85% probabilities on each trade. And you know what? I'll teach it to you completely for free on Tuesday. I'm running a free live trading training. Sign up for it. Go to felixfranz.org/webinar. It's going to be great fun. I'll teach you my whole strategy. I'll also teach you and show you how we actually select trades. You're going to see that as well. And now I'm going to get back to, enjoying my office here in beautiful London. I wish you a glorious day. Thanks for all the subscriptions. Thanks for nearly 50,000 subscribers. I appreciate you. I appreciate your desire to want to learn how to make money from money rather than work for the bloody stuff.